Arguments of whether or not a long-term dividend growth investor would be better off buying into the Schwab US Dividend Equity ETF or SCHD, for example, or if that same investor would be better off buying into the iShares Core Dividend Growth ETF, DGRO. Now, this has been an argument and a back and forth that I see all the time, and honestly, a comment that I see on YouTube all the time is that investors want to see DGRO compared to SCHD and want to know which one of these dividend growth ETFs is necessarily quote-unquote better to invest into. Now, in this video, we're not only going to compare both SCHD and DGRO, go over what both these ETFs have to offer, and some of the good and some of the bad of both of them. But later on in the video, I'm also going to share with you what I think each one of these ETFs have as far as superpowers go, and what the main most important factor should be when picking or choosing to invest into either one of them. So if you're a long-term dividend growth investor that have ever wondered, is SCHD better or is DGRO best? Make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, stacking up these ETFs right next to each other like we can see, the objective for SCHD, for example, it says the fund's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Where DGRO, it says the iShares Core Dividend Growth ETF seeks to track the investment results of an index composed of U.S. equities with a history of consistently growing dividends. Now, even though SCHD doesn't necessarily say that right away in the objective, that's basically more or less also what SCHD has done. So far they're very similar, but keep in mind these ETFs are very different in many ways also. Now, another way to compare both DGRO and SCHD, expense ratios, even though very close, SCHD does have a 0.06 expense ratio, where DGRO has a 0.08. So it is going to cost you 0.02% more to hold on to DGRO, which I guess is something to keep in mind. Now, the highlights for both of these, SCHD, it says a straightforward low-cost fund offering potential tax efficiency. DGRO offers low-cost exposure to U.S. stocks focused on dividend growth. And DGRO says access companies that have a history of sustained dividend growth and that are broadly diversified across industries. So again, very similar ETFs, and this is probably why a lot of times the argument comes up, or the discussion comes up for that matter, is DGRO better than SCHD? Please compare the two. Now, the next thing when looking at both these ETFs, the next most important thing, one of the most important things at least, is to compare both of the top holdings and of course how many stocks are in each of them. So in SCHD, there's only around 100 different holdings more or less in the ETF, where DGRO currently has around 416 different holdings. So right off the bat, that gives you a lot more diversification if you invest in a DGRO. You're getting a small piece into more different companies than that compared to SCHD, which of course, depending on what you're looking for, could be good or could be bad. But the top holdings, this is probably one of my main focuses when comparing both DGRO to SCHD. This is the main reason I personally think, honestly, even as an SCHD holder, I honestly think that DGRO will probably grow a little bit faster as far as price return and total return for that aspect, even though SCHD has a little bit bigger of a dividend, which we're going to go through here in a second. But the reason being is because DGRO has names like JP Morgan, Johnson & Johnson, ExxonMobil, Apple stock, of course, then Chevron, AbbVie, Microsoft, Procter & Gamble, Broadcom, and Home Depot. Now, even though there's some crossover, you're going to find certain names in SCHD that are also in DGRO. Just going off the top holdings, the fact that there's almost $1 billion of market value in Apple stock, just that alone, I think that's going to bring DGRO to new heights in the up and coming years. But that's just my opinion. Now, even though names like Lockheed Martin, AbbVie, Amgen, Home Depot, BlackRock, Coca-Cola, Cisco, Pfizer, Chevron, and Texas Instruments, all the names right here in SCHD, even though all these names, in my opinion, are probably going to continue to pay dividends and pay more and more dividends over time, which is a big portion of what you're looking for as a long-term dividend growth investor, I still think these names have a little bit less of a chance to grow as fast as the top 10 holdings in DGRO. Now, honestly, who knows? Maybe things are going to rotate even more, and maybe some of these names or some of these sectors that SCHD tracks a little bit closer will have a massive decade. Honestly, only time will tell. But just going off the top holdings alone, I personally think that the iShares Core Dividend Growth ETF has a good chance of easily outperforming SCHD as far as price return goes over the next decade. Which brings me into the next portion of this. I want to look at the total performance as far as both these ETFs go over multiple different time frames. So in the max time frame, SCHD, and this is since around 2011, has seen a 223% price return over the time frame. And again, that's not even including dividends. Where DGRO since around 2014 or so has seen about 142%. Again, any investor, honestly, in my opinion, would be lucky to see that type of return over these time frames. But if we zoom in a little bit, DGRO has seen a little bit more growth as far as price return goes over the last 1 year. Not to mention, year to date, DGRO is up a little bit more also. Now, this again is where things differ from DGRO and, of course, SCHD. If you look at the trailing 12-month dividend yield, which again is how much in dividends both of these ETFs have paid over the last 12 months, SCHD has a 3.43%, which is pretty massive, especially for an ETF that's also grown like it has over the last decade. Now, DGRO, even though this ETF has grown a little bit faster than SCHD, it's only paid 2.27%. So this is where I personally think that SCHD sort of shines. I think by having that extra point or so starting dividend yield, this could be very important, especially for dividend growth investors that want to use some of their dividend income or all their dividend income to retire off of later. Now, even though both of them offer a decent starting yield, that extra percentage can make a big substantial difference, especially if an investor wants to use their dividends to retire potentially even early. Now, long term, DGRO, like I said, probably has more potential to grow over time, in my opinion. So even though the dividend yield is a little bit smaller, it probably won't even matter over the next decade. But just that being said, going off of both these, comparing the two, SCHD's larger dividend yield is something to consider. Now, another thing to consider, another very important aspect is dividend growth rate, or how much more dividends do each of these ETFs pay compared to the previous year. So trailing 12 months, DGRO has a 10.84% dividend growth rate, which is pretty massive. SCHD has an 8.86%, again, pretty massive. Both these ETFs pay more and more in dividends over time. Over the 3-year time frame, DGRO has 8.86% and SCHD has around 9%. So even if we zoom on both these different ETFs, even though they haven't been trading for the same amount of time, both of these ETFs have paid more and more in dividends very consistently over the years, which is why, once again, both these ETFs are pretty much always in the conversation for high quality dividend growth ETFs, and that's because both these ETFs definitely belong in that conversation. Now, just because either one of these ETFs have paid a certain amount of dividends in the past doesn't necessarily mean they're going to continue to do so in the future, although investors like us definitely hope so. But either way, just going off of historical performance, both DGRO and SCHD for that matter have a decent starting dividend yield. Even though SCHD's is a little bit bigger, they both have a healthy dividend growth rate on top of that. Now, if we were to go back 10.13 years and compare SCHD to DGRO and also include dividends being reinvested, the winner of the SCHD DGRO on this time frame release would actually happen to be DGRO with an 11.67% average annual total return versus SCHD's 11.5%. So basically, more or less, they've almost performed the exact same as far as this time frame, as far as total return goes. But still, over this time frame, it's interesting to see that DGRO, even though it offers a smaller dividend, has still outperformed SCHD over the last 10.13 years. So even though for me personally, as of right now, I'm still actively building out a long-term position in SCHD, the Schwab US Dividend Equity ETF, and that's because of the larger starting yield and the massive dividend growth historically. Going off of historical performance, as well as the holdings, like I said earlier about DGRO, I personally think that DGRO over the next 10 years will likely just slightly outperform that of SCHD, but of course I could be wrong. Now, lastly, most importantly, I want to hear from you guys down below. Do you agree with me that there's a slight chance that DGRO is going to outperform SCHD over time, and this is because of the holding breakdown? Let me know why or why not in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.